Welcome back to the Market with Mario podcast. Today we have Sean Duncan with SMD Consulting and Accounting Services, and he also is a founder of Chief Proactive Advisors. We'll also get into that as well. Really appreciate you coming on the show today, Sean.
Yeah, I love it. I'm excited to get together and chat.
Yeah, absolutely. Well, Sean does CPA services. As you know, we are coming to the end of the year, which means you're in tax planning, forecasting, budgeting, all the things that business owners love to do. Just kidding. A lot of those guys.
Anything with money and numbers, they just avoid. It's the holidays. They just want to spend the money.
One of the reasons why I wanted to bring you on is you have very active social media, and I saw one of your posts. You had mentioned that sometimes business owners will focus more on the cost of a CPA service or accounting services rather than the return savings aspect of it. And I can definitely relate to this as a marketer. Sometimes people are like, "Oh my gosh, that a video for $5,000, $6,000, that's crazy." But when they look at the return is where it really starts to pay off. So kind of talk to me a little bit about that frustration and why we as business owners should be looking at CPA firms as an investment and not necessarily a cost.
Right. Conceptually, I would say if you're a business owner, everything on your P&L, every expense actually should not be an expense. Everything you spend money on should be an investment. It should yield some greater value than whatever you're spending money on. Now, the value may be tough to measure. It could just be enjoyment. I mean, my firm may or may not own a Miss Pac-Man machine. Don't really quite know how that translates into a quantifiable ROI, but I do know that my employees think it's really freaking cool. So that's the ROI. People like it. We have fun. That's still an investment. It wasn't an expense to buy a video game for a CPA firm. So when you take that further, marketing services, it's not expensive if it's generating ROI. CPAs should not be an expense either. A good CPA knows how to help you make more money. If you don't know how the game is played, you can't actually get the yield from it. So in my world, the AI CPA has done an amazing job teaching the universe that accountants are reliable and accurate. And yes, I know we're actually famous for being high personality too. I'm sure you're familiar with that. Clearly not.
Right.
So we are taught certain ways to do certain things. But the problem is we have all this knowledge that we can share on how to do things better. That's the type of CPA you want to find. You want to find a CPA that is going to help you with the opportunities. And so a very simple example. This is cheesy and easy. Many people don't even know you can write your cell phone off as a tax deduction. It seems kind of obvious. I mean, that's the phone I use for my business. Well, back in 2015 or 16, the law was you had to keep track of your personal minutes and your business minutes, which is absurd. Something as simple as knowing a cell phone, mileage, home office, and all these other things that you can do, they're all legitimate deductions. And so if you have a CPA that's being proactive, yes, you are going to spend some money on their time and effort, but the ROI is huge. Yes. And we have all kinds of examples of it. So not just me. I mean, selfishly, yes, I would love for you to hire us because we're pretty dang confident we can save you money. That's the key is the cost less than whatever you're going to get in value. And then there's hidden value. It's not just tax savings. It could be efficiencies, keeping you out of trouble, the cost of an audit. Doing it right keeps you from getting in trouble, which will cost you tens of thousands of dollars of lawyers. So the investment is a protection, but it's also about what can we actually keep in our pocket. We make people money if we're doing this stuff right.
Yeah, absolutely. You brought up so many good points there. And a lot of people just think that they can just, get a CPA to just here's my trash bag full of receipts, go fill out my thing. And I know you guys are more high touch than just that. And a lot of people also have this misconception around certain dates. Oh, I need to hire a CPA in, April 14th.
Right. Because we're not doing anything, so just come 14th. On in.
Exactly. Yeah, my schedule's free. But I'm hearing you say that you guys take more of a proactive role and you're engaging them on a month-to-month basis and not just 2 times a year whenever, the certain dates come up. Kind of go into a little bit of of how you are helping people on a monthly basis as well.
Okay. Well, first if everybody's going to ignore everything else that's said here, here's the one thing I'd love for you to pay attention to. When you're hiring a CPA and you've hired them to do your tax return, the public has this general misconception that they're also going to go find deductions for me. While they're doing the return, clearly they're going to let me know if they're going to find anything and make suggestions. You hired them to prepare the return. You did not hire them for strategy. And that's really important. Think about it. Any contract you've ever signed, you're listing the services that you're going to do. Also, in April, when people are preparing tax returns, I don't know if you guys realize, suicide and divorce rates are top 5 in the nation every year with CPAs because they're working 80, 90, 100, 110 hours a week to get these dang things done. They don't have time to pause and read through them. So again, know what you're paying for, because way too many people get mad at their CPA because they didn't give them advice, but they also didn't ask for the advice and they didn't hire them for it. Another downside is many of them aren't trained for it. And we're going to talk about that. One of my other businesses is training accountants to actually give advice. So first, just know what you actually paid for. Now, what we do is about being proactive. We have a subscription-based fixed fee service where we're helping you as the year is going. Because if I look at your tax return in April, I can't go back in time and make a change.
Right.
The time it's over with. You've already spent the money or not spent the money. But if I'm talking to you in June, I can lay out strategies for the next 6 months on how we can optimize and plan. It could just be as simple as, you can hire your kid. Actually, this is really good for you, Mario. In Texas, children of the age of 0 can be hired for companies, especially in modeling jobs. So, going to build a website? Great. We're going to build your website for $5, $6, $10, $15, $100,000. Oh, if we took photos of your daughter, put her on the website, you can pay her $500, $1,000, $1,500, $2,000 for her photo shoot. That shifts from your company's bracket to your child's 0% tax bracket. Congratulations, I just caused you a $2,000 tax deduction and got you a 0%. Now, there's some rules and laws, but generally, that's a trick that you can do, but I can't do it in April of 2024 and apply it to 2023's tax return because, it's a little bit too late. But while life is happening, we can manage and proactively advise. One of the sticking points is you actually have to do what we ask. We're not going to tell you what to do. We're going to suggest.
Right.
So as the year's going, we can say, hey, if you buy an airplane, hey, if you set up this retirement account, we'll give you these suggestions. You have to act on them and do the thing. But again, it's about being proactive. It's knowing that these opportunities are there so that you don't look back and go, oh man, if I had just done that, I would have saved $200,000. Happens all the time. So we do a subscription-based, and we have various different package pricing depending on the cadence and the complexity of your world, but it's about being ahead of it.
Yes.
There's an old saying about why is the rear view mirror smaller than the front windshield? It's because that's how much less important it is. And too many CPAs are so focused on what just happened instead of where are we going and what opportunities are in front of us.
That's so good. That's so good. And I love the fact that you bring about the strategy as opposed to just being an order taker and just saying, okay, I'm just going to do your tax return, right? How can I maximize your profits? How can I maximize your bottom line, so to speak? And it sounds like it's a huge mistake to forego strategy. Kind of share and you've been doing this for a long time, 17, 18 years? Did I get that right?
I've been doing this, let me think here. I started the firm in 2006 and worked a decade before that. So I'm not good at math. I'm totally kidding. I've been doing this, a couple decades. So it's really terrifying.
You've seen some mistakes in your day. Kind of, what are some of the most common mistakes you see with businesses when it comes to their either year-end tax planning or just tax planning in general, besides not having a tax plan, obviously?
Right. And that really, honestly, is as simple and cheesy as that sounds. It's not even trying to think about it. Nobody wants to talk about taxes. No, it's not exciting. It's not sexy. It's stressful. Mm-hmm. And then trying to finding an accountant that actually does this is really, really hard. It's why I spend so much time teaching other accountants. I mean, yesterday, I was at a TV studio and a virtual accounting conference, and we were teaching about advisory services. Last week, I was in Florida. teaching accountants how to give advice. There's so few of us that actually give proactive advice that I can't land all the clients. So my goal is teach the other accountants how to fish so that we can help hundreds of thousands of families by teaching those people to fish. So that's a big mission of mine. So finding the person in the first place is hard.
Right.
Don't do that in December because, again, it's the holidays, man. Thanksgiving just happened. I close from Christmas to New Year's. So first of all, as an end of year planning, find somebody soon if you can and start a plan. There's no one way to do it, but make sure they understand you and your industry. So there would kind of be a little secondary mistake that's made.
Okay.
We have specialties. We work predominantly with medical practitioners. We typically work with real estate investors and software developers. Those are our big three. We do help lots of other things like manufacturing and retail and restaurants, and there's other businesses.
Okay.
But our big three is where we get a lot of attention. We have a deeper dive of knowledge. Now, there are things we don't do. We don't do oil and gas accounting. We don't do nonprofit accounting. I point those examples out because you want to know what your accountant really knows. If you come into me and ask for advice on how to properly manage your nonprofit, I would screw it up. I'm okay with that. It's fine. Many accountants don't want to admit they don't know stuff. So understand what they enjoy. Listen very carefully to what they're great at and what they have a passion for. If that matches up with what you're doing, right on, go for it. If they kind of, yep, I can help you with anything. I'm good. I do all kinds of stuffs. Pause.
Mm-hmm.
Who do you like to work with best? What are the biggest clients? Ask questions to understand that they understand you. Real estate accounting is completely different than retail accounting. And if we don't do real estate accounting, I can't give you advice and I could screw stuff up, which, by the way, we clean up a lot of messes from people that just don't know that.
Yeah.
So it's the interview process and understanding that they're good is the key. Then it's understanding timing. When we're talking end-of-year planning, very simple trick, and just if you want an idea of a very easy strategy, when should I spend the money? If you know you're going to spend $20,000 on a piece of software, you know you're going to spend it, it's probably going to be first quarter of next year, you're going to invest in this thing, this stuff that you're going to buy. Should you buy it in December? Because you're going to spend the money anyways. Putting it on the credit card in December and paying it off in January is still a deduction in this current year. So you look at, what is my taxable income this year? What do I think my taxable income is going to be next year? Maybe you had a bad year. COVID. A lot of people had a really crummy year. Their bracket was lower. They were down to a 22% bracket. But next year, they're going to be in a 37% bracket. Save the deduction. Do it next year in 37%. If both years are the same, money's worth more today than it is next year.
Right.
Buy it now. Get the money in your pocket. Move on. So it's timing is probably the second mistake I see people do is they either buy too much in this year or they just say, I'll get around to it next year. A very specific example on this, and this happens, again, we work with doctors a lot. Doctors make good money. We typically deal with surgeons and things like that. So they make really good money. They don't go consult their accountant, but they know that they should buy stuff and that buying stuff is a tax deduction. So what do? They go buy $100,000 of new equipment for their office. Good. They don't need the equipment. Because see, here's the other side of that. Deductions are awesome. But I'll give you an example. And I'm sorry I'm full of stories. I have all kinds of examples.
I love stories.
Decades.
I'm in marketing, so you know I love stories.
Okay.
So go ahead.
So let's give you an example. So I had a chiropractor years ago that came to me and said, Sean, I'm going to go buy $20,000 of TVs. And what I'm going to do is I'm going to put a TV in each one of my exam rooms. So, well, what are the TVs for? Well, I'm going to get a $20,000 tax deduction. Okay, but I mean, are they there for diagnosis, putting X-rays? Or what are we doing with the TVs? I don't know. I'll run the TV or have some movies or something playing. Do your patients want that? Well, I don't know. Well, does it add value? Does it make you better, make you more profit? No, but it gets me a $20,000 tax deduction. So if there's not actually helping you,
right, you're
going to currently he was in a 24% tax bracket. So you're going to get $20,000 expense and you're going to get $4,800 back, 24% of $20,000. Yeah, I'm going to get $4,000, almost $5,000 in my pocket. But you're spending $20 to get it. And you guys can see where this is going. And he's like, yeah, I'm getting $5,000. It's like, what if there's a way to spend $10,000 and you get $5,000 back? Oh, I'd do that too. Great. Hand me $10,000. I'm going to give you
There
$5,000
you
back.
go.
And you get to write off
Yeah.
the $5,000 I got to keep. So congratulations. I gave you more than $5,000. That's ridiculous. What do I get for that? A tax deduction, which is the same thing as the darn TVs. So the real world comes into play here.
Yes.
Don't make dumb business decisions just to get a tax deduction. So when I'm here in this moment of the end of the year, not having a plan at all, not even talking to somebody, not talking to the right type of person, but then when you're timing your deductions, make sure it's the right timing, and then make sure you're actually making good business decisions first. Taxes should never be the reason for the decision.
Right.
The decision should be sound, and then we roll into the best way to do it. So a long answer to it. There is, again, clearly not one answer to any of this stuff.
Right.
Everybody's world is different, but these are a few of the things that we see all the time.
And that makes so much sense. And I see this a lot in marketing whenever I'm working with a business owner. They'll go out and buy these trucks at the end of the year and all these things, but it's like you said, if they don't need them, it doesn't really make any sense. And then sometimes too, like you said, if they know that they're going to do videography and have a bunch of content made,
right?
Why not do it? And sometimes, I'll have clients that'll do that. They'll say, hey, we have X amount left over at the end of the year. Can we go ahead and do this and then use it January, February? So we're kind of in that same boat. And one thing that you mentioned was the timing. And so I love the fact that you guys have that subscription model because you can work with them throughout the year to coach them on some of these timing things, as opposed to, like we talked about before, hitting you up in March and saying, hey, what can you do?
Yeah.
If you have an advisor that's with you through the whole way, you can plan with them, and it kind of sounds like you're almost a counselor too. Like, hey, let me come alongside of you, and
we're definitely a counselor many times.
Exactly. And you touched on the proactive advisors part, chief proactive advisors, and
which, by the way, CPA, chief proactive advisors.
Gosh, it's so good.
I know it's kind of cheesy, but
Okay.
I got a kick out of it. That's why I named it that way.
I love it. And I've known you from the SMD days, and something that caught my attention on your website was you guys were growing, you guys were crushing it, but it was one of the worst periods of your life, your team, because you were putting in all these hours, it's all the stress you talked about. And then you said, enough is enough. And I want to run this the right way. I want to teach people the right way. Kind of let's transition to talk to us a little bit about how you're helping other accountants and CPAs, and a little bit about that transition from I can't stand it to now I'm thriving. I'm looking fresh and lively. We're serving people well. Kind of talk to me about that transition.
Okay. So I'll give you a little bit of perspective on why. Because why, same for any business owner. Why you have the business is actually more important than having the darn business.
Yes.
More money is good, but more money should never be the goal. The money is the tool to accomplish and live the life you want to live. And that is so lost so often, particularly when the Joneses have a nicer car than you. And we're playing that game. So for me, the only reason I'm an accountant was I was going into the FBI. That's it. Come on, y'all. Nobody chooses accounting. Okay, sorry for any accountants listening, but come on, man. Did we really choose this stuff? Accounting happened to be one of the most direct paths to becoming a special agent in the FBI. So that's what I was going to do. Fast forward, in 2003, I turned the FBI down during my final interviews because it dawned on me how much of an absentee father and husband I would be if I joined the agency and pursued hostage rescue team, which is basically SWAT, that I wanted to do. Because I was kind of dumb meathead and I wanted to kick in doors and legitimately chase bad guys, not just paper push. The numbers part is the money that goes with drug deals. It's the money that goes with everything else. That was why accounting was important. But it was more important for me to be a husband and father. So now bringing it to your point, 2017, I looked up, and I'm the largest firm in Frisco. Now, if you know anything about Frisco, kind of a big deal. If Frisco's a little bit of something.
Yeah.
Fastest growing city, all the stats, Dallas Cowboy headquarters, PGA headquarters. But in 2017, I'm the largest firm in town. And I say this on stage when I'm speaking in front of accountants. By every numerical metric, I'm killing it. I am making a ton of money. I'm growing like a beast. I'm tearing out the walls to add more employees. I did a projection, and just to give you some numbers, in May, June of 2017, I was projecting how many more clients I would add the rest of the year. My conservative estimate was I was going to add another 300 clients, but probably going to add 500. And so I'm doing my budgeting based on a range of 300 to 500 new clients. Now, again, I'm still a small firm. I'm not 1,000 people. We were 17 employees and getting ready to add another 3 more in the next couple months and just go, that's a small firm, but 500 new clients? Can you imagine trying to take on 500 new clients?
Right.
But yet we were getting ready to go do exactly that. That's great. On paper, it's all success. However, here's a very simple signature moment. There's this beautiful afternoon. I'm sitting in my office. It's 2 in the afternoon, 2:30. It's 80-something degrees out, which in Texas happens twice a year.
Right.
We get 80, right? So I'm in my corner office and I'm pounding out some tax returns. I'm like, I am making money. Yeah. And then my phone buzzes. And I look at my phone real quick and realize it's a picture. My wife is texting me of her and the kids at Six Flags because it was Sunday at 2 in the afternoon. I wasn't with the kids I did have, but I turned the FBI down for kids I didn't yet have. That's broken.
Wow.
I was miserable. I was exhausted. I was losing talented employees because they didn't want to work these ridiculous hours. And as much as everybody wants to bemoan, millennials don't work like us do. No one wants to freaking work 90-hour weeks and be unappreciated.
Right.
And I truly looked up and said, something's got to go. And I made this really ridiculous, radical decision. I fired all the tax returns. In June of 2017, I sent letters out and said, we're done. We've since rolled it back in and I explained how that works if anybody's ever interested. We were going to focus on what we were famous for, giving advice. The reason we grew so much is we were those accountants that would look at your tax return and say, ooh, I got an idea for you. We do what we could, but here's the plan for next year. We were already known for that. That's why we landed so much. But the darn tax returns would still make us disappear 3 months of the year in the beginning of the year and 2 months later on. And have you ever tried to call an accountant on April 14th?
Yeah.
They don't answer.
It's not a good look. Yeah.
We answer because I've cleared the decks and I let other people do the tax prep so that our firm focuses on the advice. But it all started with I wanted to be an agent because it made a difference and then allowed me to be a good husband and father. Fast forward, I have a firm that focuses on advice and strategy and planning because I wanted to make a difference. I wanted to actually count. If I can help you put your kids through school because we saved you $50,000 a year in your taxes,
right?
That's real stuff.
Yeah.
Not saying that doing tax returns isn't important, but boy, when we're talking about what's more important, this is more important. And so then as that kept going, I had no intention of it blowing up to be anything. I wanted to be successful. I wanted my employees to be successful, and I wanted my clients to be successful. That's all I was trying to do. That started getting us national attention. And I'm not overstating it. ADP, the big giant massive payroll company, contacts me and says, can we write an article on you? Sure. I get invited to an executive board, a national executive board for ADP. I get invited to go speak at a conference. And next thing you know, I'm having people invite me on podcasts in my industry, asking me to come speak on stage and then create a curriculum to teach other accountants how to do what I do, which is where Chief Proactive Advisors came in. I found out that I had screwed up so much in the standard journey that we were taught, and I created a way to give advice that didn't exist, that then I just started creating a curriculum where I can help other accountants make the transition. Because whatever you are as a business owner, if you get miserable or tired or exhausted, CPAs are business owners too. And they get tired and miserable, exhausted, and they get trapped. So how do I help them from being trapped? And if I can help them from being trapped and start creating value, then I'm starting to save the nonprofits and the oil and gas companies I can't directly serve by teaching the accountant that does. So it's sort of this whole giant pay it forward, roll forward, but it really just started with me honoring this is what I want to do. This is what I want to be, and this is who I want to help. And then just built the whole system around how do I support clients and employees and myself in as much of a unified way as I can. So again, I'm full of long stories, but there's one.
No, I love it. And I love the fact that you have a system around it. And it's not just you've been able to scale, you've been able to train, and just kind of how we ended up here is, I reached out to you, but I did not talk to you until today. I went through Kelly, who is amazing. Kelly, if you're listening, thank you so much for helping us set everything up. She's a rock star.
Yeah.
But there's no way you could serve at the level you're serving if you're texting with me or going back and forth with me. So I've been able to see your process, kind of behind the scenes as well. But again, I've known you for years and have seen, your exponential growth, and it's great to see that you're now doing the speaking and, training up other CPAs to do what you do and accountants. So I love that. As we kind of wrap up here, I love the fact that you talked about the rearview mirror and the windshield. Let's talk a little bit about the windshield, where we're going, 2024. Mm-hmm. Let's give some tips just on forecasting, budgeting. How can the medical industry, one of your industries, how can they be? What can they be doing to prepare financially for a great 2024 as you forecast? What are some tips that you're giving to these guys? Like, okay, let's not look back. That we can do that when we put together the tax return. Let's forecast. Let's budget. What are some things that you're advising your clients?
It actually starts soft. And what I mean by soft, it actually has nothing to do with numbers. Way too many of us fall in the trap of just do it again, do more, I should grow more, I should add more. What do you want to accomplish in life? What is the point of your medical practice? Why are you investing in all these multifamily properties? Why are you building this firm? If we don't know where we're trying to go, let's define success. Let's define that first before I even worry about a stinking plan. Because we don't just do tax plans. We do estate plans and wealth management and asset protection. So I can't build that correctly if I don't know are you trying to retire in 5 years? Or are you trying to build something that you're going to get sold in 10? Are you trying to have an autopilot business that you kind of just hang back and you're on the beach and it's just generating money? Are you trying to be in 10 locations or 1? All of that stuff matters. Your definition of success. And I say this a lot. If you and I are sitting up here in McKinney and I say, what I need to do is let's go meet at Reunion Tower in downtown Dallas. You and I can both take completely different paths. We're going to end up at Reunion Tower. We know where we're going.
Right.
If I say, hey, Mario, let's walk south for about 25 miles. We may not end up in the same dang place. We can both be headed in a direction we think is correct, but we don't know where we're going. You can get off path. You can head south and be going completely different place that I'm going. And we're technically both going south, but we could be tens of miles away just from walking. The same is true of business. I strayed away from what I was about to do. I was doing all these stinking tax returns and then was not the husband and father I wanted to be. I wasn't actually helping clients in a meaningful way, and my employees were miserable. My purpose was that. So get clarity on what success is.
Wow, that's good. Yeah.
Then we go, okay, I see what you're trying to do. Because if you're planning on selling a business in 3 years, I am going to do so totally different stuff than I will if you're about to pass this on to your kids when you retire. Once I have that clarity, then we lay the plans in place. When you're deciding what to spend money on, because that's talking the financial, does it support the goal? It's that simple. When I'm about to spend money, does it create more free time? Because that's a big deal to me. I don't know if you've ever noticed, I travel a lot.
I kind of noticed. That's
good. When I speak to accountants, I point out I take every spring break as a vacation, which is March. That is a sin in my industry. People look at me like I'm completely bonkers. I take month-long trips in the summer. So but that's part of my definition of success. I need a system that allows me to head out and go do that thing. When you mentioned that I didn't coordinate the appointment, I actually don't even do client work much anymore. I build a system where I have amazing people. My goal is to teach them so that they can help the client, not me sit in a room. Because if I'm just sitting there in a room doing the work, I just have a job. I don't have a company.
Right.
And I also have the worst boss in the world who also knows when I'm playing video games instead of working. That's not a company. So when you're talking about success, think about what that is. And so when you're looking at what you're going to spend money on, is this going to free up more time? Is this going to make me more profitable? Is this going to reduce errors? Those are tax deductions. You're not worried about the deduction. Does it support the business purpose and mission? Then we spend the money on it. And that comes back to the first thing is everything should be an investment. Everything should be leading towards your goal. Now, do we want to talk specific tax strategies? Literally just found out this week that Texas franchise tax changed its threshold, which used to be 1.2 $2-ish million of income before you pay tax. Now it's up to $2.4-ish million. So if your revenue is below $2 million, you actually don't even have to file a Texas franchise tax return. You just have to file an information report to say that you're still in business and who your officers are. That's a big deal. A lot of people were freaked out about that. That is immediately a different tax planning. The amount of revenue you have before you pay a tax just doubled. That immediately changes my tax strategies as it relates to Texas reporting of income. Now I can report more in Texas. So there's one simple little thing that a tax law came out this week where they finalized that. When you're looking at what types of industries is most of your audience? I mean, is there anything in particular?
Most of them are service industries, and within that, primarily we work with a lot of contractors. So general contractors, construction companies, pool builders, guys like that.
Okay, perfect. So when you're buying the big giant asset, I'm going to buy an excavator, I'm going to buy a pickup truck, I'm going to buy a thing. Here's a little trick, actually a timing trick. All the car dealerships, and particularly car dealerships, they pay property tax, just like you do, on all of the inventory sitting on their lot as of 12/31. So if you're going to go buy a truck and you walk in on December 27th, right after Christmas, you're like, I'm thinking about buying a truck, negotiate like a beast, go as hard as you can on it, and then say, if this truck's on the lot, how much do you pay in property tax if this thing is here on January 1? You might actually get a few percentage points off on that final piece of the negotiation. And then you're getting a tax deduction this year because when you buy the truck, that's the year it affects your tax deduction.
Yeah.
But again, it's about saving real money before we worry about the tax deduction. So a timing thing as we approach the end of the year, there's one little trick. But you don't have to buy the dang truck. You can get it next year too. But do not buy a vehicle in the company if it is not supporting the company's purpose. No, you can't go buy a Hummer as a real estate agent and write the whole stinking thing off. I know everybody in Frisco seems to think that's what you can do. You cannot. There's a whole bunch of rules on it. But when you're planning it, it should support the business purpose, business mission. That's where I'd start. I've got 1,000 different specific ideas and strategies depending on contractors and what they want to do. One last thing I actually really would recommend, be proactive about deciding what your retirement planning looks like. Way too many individuals forget that they have choices on IRAs, SEP IRAs, 401ks. There's things called defined benefit plans. There's things called super 401ks. We have a client that puts $700,000 away in his retirement account every year. If anybody knows anything about the laws, wait, no, Sean, the limit's like 60. There are exceptions. So knowing how much money you're making, and what your employee makes, different ones give you different tax deductions. But everybody seems to think, I'll worry about it next year. My CPA will tell me how much I can do, and I'll just do a SEP. Well, there's actually potentially higher tax if you do a SEP in April as opposed to doing a 401k in November. So understanding what your goals are for retirement is a tax deduction thing that we're wanting to decide on for as well. So as you're planning, what is your success? What do I want to achieve? What do I want to do? What am I really going to spend money on to help with that?
Right.
And then honestly, this is about you and having a lifestyle. Retirement planning is a big dang deal, and it's a huge tax deduction. So I didn't come in prepared with specific canned answers, but that's what I come with off the cuff.
No, you did. You definitely shared a lot of educational. I learned a lot today.
Good.
And I know our audience is going to be better for it. Really appreciate you coming on and sharing your wealth of knowledge that you've gleaned over the years. So if someone's listening to this and like, you know what, I really need to get on the ball. I need to be more strategic and hire a tax, planning firm, CPA. What's the best way for them to engage with your services? It's a two-part question.
Sure.
And then if a CPA is listening or accountant and they're like, look, I want to get on that level as well, how do they get involved with Chief Proactive Advisors?
I know, it's a mouthful. It's a bad name in a lot of ways, but it's kind of cheap. We call it CPA squared because it's an exponential step up from the CPA world. That's the theory. So it doesn't have to be us. I mean, I'm not trying to selfishly take over the universe. Obviously, we want more clients. We love helping people. But hey, if you are an oil and gas company, I'm not your guy, but you know what? You can actually still call me. An unintended consequence of all this speaking I'm doing, I'm also meeting the best of breed of all the other specialists. When I'm speaking at a national accounting conference, I'm meeting other people that are specialists in superstars in their specialty, I have referral sources. But in order to reach us, it's SMD, as in Sean Michael Duncan. CPAs are required to use their full name, surname, or initials. It's dorky and cheesy, but it is what it is. smdaccounting.com.
Okay.
Simple, easy website. You can find us on Facebook, LinkedIn, all that stuff. Reach out. Something that you and I have talked about is for contacts of yours, people that are a part of your podcast, your friends, we do a 1-hour no-charge intro meeting. And so what that is schedule a meeting. There's no cost, no obligation. Let's just figure out what's going on. Let me hear what's happening with you. Let me understand. I answer technical questions sometimes in those meetings. Then we decide where to go. If that's, you know what, you just need a tax return prepared, call so-and-so. If it's, oh my gosh, you got a freaking mess here. But we can't give you a quote until I know even what's going on.
Right.
So 1 hour, no obligation. Let's just figure what's going on and then decide, do I refer you to a friend that does something better than that? Because I have no fear of admitting what I don't know. I would rather just not be good at something and allow somebody else to be amazing at it because I know what we're good at. We're really, really good at what we do. We're just not good at everything. That's important to know. As far as chief proactive advisors, if there are accountants, and I can always describe what our typical clients look like if that's ever helpful. But for accountants, if you're thinking, look, I'm stuck, man. I work 90 hours a week, 6 months of the year, and then I'm barely hanging on the rest of the year, which is a miserable grind, and it really is. I mean, I don't think anybody really understands how hard and how much it grinds you up in this profession. Mm-hmm. Interesting stat, actually, I just popped in my head. Over 70% of the CPAs in practice today are 65 and older. And last year, the number of students that took the CPA exam is half as many as there were 5 years ago.
Oh, wow.
There's fewer of us, which means more people looking for fewer resources. Wow. The supply-demand curve is screwed up right now. So the CPAs are drowning, and there's a lot of automation stuff happening. So if you're a CPA trying to understand, look, I know I want to help people more. I'm getting crushed in this tax game. I'm not charging enough. I'm doing Chief Proactive Advisors. It's chiefproactiveadvisors.com. Search for it on LinkedIn. Search for it on Facebook. It's all there as well. I post a lot of times when I'm speaking at events, adding new content and curriculum. Just ask questions. And anybody, honestly, just ping me. If you got a question, you just DM me real quick. I can see if that's something I can answer real fast. Obviously, I can't give tax advice over a DM.
Right.
But if it's something that you want to understand real quick or concept, I'd try my best to answer that. But fire us an email. And all the contact informations are on the website. But hopefully that gives it. I know, again, I'm full of long answers.
I love it.
I can add all kinds of flavor to this.
No. This has been great, Sean. Really appreciate you coming on the show. Hope you and your family have an amazing holiday season. Thank you all for watching and for listening. We're going to wrap up this episode of the Market with Mario podcast, and we'll see you next time. Thanks for listening.